Guy, how far now?
Omo, I'm not really fine. Do you know they paid me last week and right now I can't even boost up to 10,000 naira in my account?
Seriously?
Yes.
Did you budget?
Which one is budgeting? Now I'm not a politician.
That's why your money is missing like NEPA light.
But I didn't buy anything serious, shoes, bags, the thing that guys need now. And just like that, fiam, the money has disappeared.
But it's all these little things. That's why it's taking your money.
Nah. But what should I do?
See, you have to create a budget. You have to track your spending. You have to prioritize your needs over your wants. And you have to save before you spend, not the other way around.
So what you're trying to say that this money management thing is no child's play?
It's no child's play at all.
The Money Click is an annual financial literacy program to help you up your money game. The Money Click is not just about money, it's about mindset. So in the Money Click program, go beyond budgeting to rewire your thinking, to rewire your mindset, to change your thinking about income, to change your thinking about money management. So we'll help you grow your income, we'll help you manage it, we'll help you invest with confidence. Money is not just about what you know. Money is more about how you behave. And every day in the Money Click program, what we'll try to do is to influence how you behave about money. This is not just financial education. This is financial transformation. I will hope to see you become a part of it. Thank you.
All right. Good day, everyone, and good afternoon, and welcome to today's live session here on Instagram, on Facebook, and also, I know we're also live on Twitter. Sorry, I know we're also live on YouTube. My name is Chukwuemeka Nezi, and I want to welcome you to this wonderful edition of our Wednesday live sessions. Yes, I see that there are people already who are here, who have joined us. I see. Yes, apologies for that brief interruption. Yes, I see our cohort leaders have mobilized people to come and join us. I see cohort 2 leader was at the top of it. She was already here even before we started. Thank you so much, Ma. God bless you, Ma. Thank you to all of you who have joined us here today. God bless you all. And I also see those on Instagram as well. Yes, I see all of you on Instagram. Yes, I see Tita Academy. Welcome, Ma. I see Madam Linda Oku as well. I see you. You are all welcome. Glad to have you all in this class today. All right. So today we're going to be looking at how beginners can start investing in stocks. All right, so without wasting much time, we're going to get right into it. Thank you. I see you all. Thank you so much. Thank you, and thank you to all of you who have joined us. Please remember that if you're here and then you've not invited somebody, then it means that there's something missing, right? So if you're here, do us a favor, use the link for this video that you used to get into the video, share to your contacts for them to come and join us, right? Just share to them, share your status, share your cohorts, share in your reading groups, right? Just share it wide. Share your church group even. Let them come and learn about money. Yes. All right. So thank you very much, everyone. And let's get right into it. So how beginners can start investing in stocks. A lot of times most people think that investing in stocks is complicated, right? They think it's more complicated thing. How do we get about it? How do we get on with it? In fact, for some people, they think about it, they just get tired, But the truth is, investing is simple to understand, right? But it requires discipline for you to succeed in investing. A lot of discipline, right? Excuse me. A lot of discipline for you to succeed with investing, right? So you don't need to be rich for you to invest in the stock market. So for some people telling themselves, oh, I'm just waiting for that time when, oh, I'll have so and so amount of money and before I can start. You don't have to have so much for you to start. Thank you so much. I see Madam Pearl says she has invited 5. I see Madam Pearl say she has invited 5 people, right? Thank you so much, ma'am. Thank you. Please invite more people. Share the links. Get more people to come and join us. Share more people to come and join us, please. Thank you. All right. So you don't have to be rich for you to start investing. In fact, you need to start investing for you to become rich. People think that I have to be rich first, right? People think, oh, let me become rich, then I will invest. No, investing, then you become rich. All right. So it's the other way around, away from what people usually think is what they should do or how things should be. Right. So one of the things that you need for you to invest right, especially in the stock market, is you need the right foundation and the right mindset. The right mindset. Let's start with right mindset. Right? Before you invest a single naira, a single pound, a single dollar, you need to fix your expectations. One of the things that kill people in the stock market is not the market itself, it is they themselves. It's the mindset that you use to get into the market. That's what kills you. And that mindset also has a lot to do with your expectations. Right? So fix your expectations. The stock market is not a get rich quick scheme. It's not the place where you put your money in today and tomorrow you withdraw it double. That's not how it works, right? It doesn't work that way. Just like a lot of people have messaged me before in the past. Someone messaged me one day. I think I've shared this before. And the person messaged me one day, and the person said that she wants to know that if she's to put her money right now in so and so stocks, that what she wants to know now is how much is she going to get out? That's what she wants to know. That she needs to know how much is coming out of it in the next 6 months. I said it's not like that. Yes, you expect to have a good outcome, but at the same time, it's not automatic that, oh, in the next 6 months, you're going to have double of your money. Somebody once told me, I have money to buy a car right now, right? About 80 million. Is there a stock I can put it in, and in the next 6 months, I'll get double the money, I'll buy my car, I'll still keep extra cash? I said, no, it doesn't work that way. All this is because of the kind of mindsets that we have, the kind of expectations that we have of the market, right? So it's not a place where you get rich quick. It's not a place where we gamble. It's only in gambling that you put your money and then you expect returns, 50% return overnight in that manner, right? So it's not a place for overnight success. It is a tool for long-term building. There's a difference between long-term building and wanting something to happen very quickly for you, right? There's something Warren Buffett would always say. Warren Buffett would say that the stock market is a device for transferring money from the impatient to the patient. So if you come into the stock market looking for quick profits, you will likely lose money because you're going to be impatient, right? And the impatient are those who pay the patient. If you come in with patience, you will give yourself a real chance, a very real chance to grow. Trust me, you'll give yourself a real chance to grow. Okay, and let's get on to the second one. Let's get on to the second one, and which is understanding what you are buying. Understanding what you are buying, right? So another thing that you need to do, right? One of the foundations that you need before you get into the market is that you need to understand what it is that you're buying. A lot of us don't understand what we're buying. We never understood what we bought in the past. A lot of us before now, we've invested in the stock market, right? But we didn't even understand what we did. We just went in, right? And just invested based on hype. Some of us invested based on the things that we're told. Some of us, they just told us, invest in these. We said, oh, really? Really, you mean it? They put in their money. They didn't get to understand anything about what they were investing. So you need to understand first and foremost, that's the first understanding you need of what you're buying. You need to understand that when you buy a stock, you are buying a piece of a business. You're buying a piece of a business. So when you're buying a piece of a business, right, you should not be asking yourself, will this stock go up? That should not be the first question to ask yourself. The first question to ask yourself is this a good business? So I want you to move your mindset away from the stock and focus your mindset on the business, right? Move away from the stock, focus on the business. It's the business first before the stock, all right? If you want to be a long-term investor. So you need to look out for businesses that solve real problems. You need to look out for businesses that have consistent demand, right? You need to look out for businesses that are profitable, businesses that are growing. You need to look out for businesses that have strong reputation. Some of us that claim that, oh, we've lost money in the stock market in the past, I want you to take out some time and have a look at the type of businesses that you invested in before. Look at those companies, right? Now that you have a little better knowledge, you would realize that those companies are nowhere near. They are nowhere near the kind of companies you should put your money in. So for you to invest well, you need to start thinking like an entrepreneur, right? You need to think in terms of the business. What can this business give to me? Is this business good enough? What are the problems this business is solving? The problems they are solving will need to always be there for them to solve. Or is it the problem that can finish and they will no longer have anything to profit from anymore, right? Do they have consistent demand? Are they bringing out new products? How often do they create new products, right? Are they profitable? Is the company growing? Within the industry where they exist, who are the giants? Are they the giants? Are they in between? Are they the ones lagging behind? Right? What reputation do they have? Okay? So you need to think about businesses that people use daily. That's the type of business where you want to put in your money. What are we talking about? I'm talking about banks. I'm talking about telecom companies. I'm talking about food producers. These are businesses that every day people would require their services. All right? People require their services. So these are also easier for you to understand than chasing random trending stuff. A lot of us, the only way we invest is by what is trending. They tell us, oh, it is trending now, we're rushing. And today in the Money Click program, I was telling the billionaires how I paid dearly in the past for following trending stocks. Anyway, let's move on to the next. Number 3 is fix your financial foundation first. So before investing, you need to make sure that your basics are in place. The basics must be in place before you start investing. What are the basics? Emergency funds, right? So you need to have at least 3 to 6 months of expenses already saved somewhere. So you need to have emergency funds before you start investing, right? Another thing you do not need to have before you start investing is high interest debts. You don't need to have them. Avoid them, right? Clear them off, right? Another thing that you need to put in place as well is income, right? Is income. Because you need to have a stable income so that the money you are investing is not money you need immediately. Why a lot of people have the mindset of quick wins is because they're investing money they need tomorrow. People want to invest their school fees so that it will double. People want to put in their rent money so that it will double before, they would go on and do the needful. So you don't have to. It's not your rent money that we're saying you should put in the stock market. It is not money for your school fees that we're saying you should put in the stock market. All right? It is money that you know that you would not need in the immediate short term. That's money that you're expected to put in the stock market, right? Money you won't need in the short term. All right. And when you put money you don't need in the short term, that's when you protect yourself from all the panic of the stock market. Why? Because you're thinking long term. That's when you look away from all the market fluctuations. But when you put your rent money in the stock market, that's when you start checking. You start checking the stocks every hour. You're looking at it. Your heart is beating every day. You're checking it. Why? Because you need that money in the immediate short term. You need it in the immediate short term. So you would always check how far, how is it going. Well, when you know that you've invested in a consistently profitable business, and then you put your money in it and you tell yourself this is for the long term, what is happening in the short terms will not disturb you because you also know that it's part of the market. All right. Okay. Number 4 is to start small. Start small, but start early. Right? Start small, but start early. One big mistake people make is waiting until they have a lot of money. You don't need millions to start. You don't need millions to start, right? You can start with even 5,000. You can start with 10,000. You can start with 20,000, right? Whatever you have is enough for you to begin. Is enough for you to begin. So start with as little as you can. All right. So start small. Start small. Don't wait until you have millions before you start investing in the market. Right? No matter the amount that you have, start with it. Because the goal is not the amount. It's not the amount. The goal is to build the habits. The goal is to build the habit. It's not the amount. Right? So that's the goal. Build the habits. So, because one thing about investing that a lot of people do not understand most times is one of the things, time matters more than timing. We always say that. So, the time you've spent in the market matters a lot, right? Somebody who has spent 20 years in the market is better off than somebody who is just spending 3 years in the market, even if the person is putting more money, right? And that's because of compounding. So the person who puts in little over 20 years is better than the person who puts in a greater much over a few years, right? Over a few years. Okay. All right. The next is number 5, use the right platform. Use the right platform, right? So to invest in stocks, you need a broker. You need a broker or an investment platform. You cannot invest if you do not have a broker in any country where you find yourself. One of the things that you need first to invest is a broker. And these days, things have become easier where certain brokers, right, have gone digital. And then now investment platforms that you can use on your phones to invest. Now, some brokers who are not digital savvy are also partnering with some other companies that have applications where you can invest digitally. So today, you can invest from your phones, no matter where you are in the world. You have companies that are available to you where you are, that gives you access to the stock market. So look out for those stockbroking firms. Look out for those investment apps. Look out for those online trading platforms, right? But make sure the platform that you're using, it doesn't matter which platform you're using. What matters is the credibility of the platform. Well, that's what matters. Because these days, there's a lot of buzz around the stock market. So very soon, you're going to see a lot of people investing to create applications, to get into the market. Why? Because scammers are also looking for opportunity, right? They're always looking for opportunity. So you need to ensure that you're using the right thing. Now, how do you do this? You first of all make sure that the platform you're using is regulated. It's regulated by the authorities in the country where you are, or it is regulated by the authorities in the country of its origin. and also the country where you are as well, right? Make sure that it is secure. You don't want to put your money in a place where tomorrow they'll start telling you, right? Also, make sure that it is easy to use. The third thing you also need to make sure about the platform is the commissions of the platform. You don't want to deal with a particular platform that will charge you very unnecessary high commissions for trading stocks. All right. So also avoid platforms that promise you unrealistic returns. Right? Deal with reality. Number 6, don't put all your money in one stock. And that process is called diversification. So instead of investing everything in one company, spread your money across different companies, multiple companies. This will help you reduce risk. Number 7 is avoid hot tips. Hot tips and noise. That's what I call it. Avoid noise. And because it's one of the fastest ways to lose money in the market is listening to WhatsApp forwarded messages about the stock that is the one that is trending now that you need to buy, and you rush and buy. Right? The fastest way to lose money is to go and buy a particular stock just because the whole of social media is talking about it. That is not what you need for you to buy a stock. Because the truth is, by the time those WhatsApp messages about that stock is moving, by the time the whole social media is talking about that stock, it's already late. Peter Lynch would always say something. He would say, know what you own and know why you own it. So if you can't explain why you bought the stock, then you shouldn't own it. You should have a reason. You should always have a reason why you own a particular stock. You should why this stock is in your portfolio. You should always have a reason why, okay, I'm investing in this particular company. There should be a reason. Always. And then number 8 is invest consistently, not occasionally. Right? So don't wait for the perfect timing. Instead, make it consistent. Tell yourself every month, no matter how little, I'll put in this amount of money in a particular stock. Make it regular. Stay consistent with it. Right? Just have a disciplined investing approach to your investments. Right? Because when you also do, it's also going to reduce the pressure of you trying to time the market. There's no need trying to time the market. Just take it little by little. Take it one step at a time. Be consistent with it. Right? And be patient. Number 9, be patient. Be patient. You need to understand that wealth takes time. Wealth doesn't come overnight. There's this new culture in our societies today that makes it look like wealth is an overnight thing. That wealth just starts growing, overnight and all that. Right? Wealth is not an overnight something. That's the reason why you shouldn't, especially through the stock market. Creating wealth through the stock market does not happen overnight. That's why you should not put, I'm saying it here again. Do not put money that you want to use for your budget, monthly budget, to put into the stock market. You have a separate budget for it. Right? Yes, I see Madam Omola laughing, saying rent money or school fees in stock market. Yes, people do it. People put rent money in stock market waiting to, and telling themselves, oh, I'm going to multiply it. At least this rent money, instead of this rent money just staying there, let me multiply this money quickly, quick cash, and then come back and continue my life and double it. But that is a wrong approach. That's a wrong approach. All right. So patience is key in the market. The biggest mistake beginners make is quitting too early. So you need to have the patience to wait. Right? People want to invest today and get returns tomorrow. That's the problem. You put in not doubling. Right? It's not a get rich quick scheme. So you need to allow time. You need to allow time for your investments to grow. Allow time. And number 10 is keep learning. Before I even go to number 10, the reason why we talk about time, allow time, is because of one simple word: compounding. Compound growth. Right? Compounding needs time. Without time, compounding is useless to you. And we're talking about long periods of time. And that's why we emphasize on starting early. So, number 10 is to be patient. Sorry, number 10 is to keep learning. Keep learning. Keep learning. Keep learning. Always keep learning. Don't stop learning. One of the things that would help you to keep on as a new investor, as a beginner, is to ensure that you learn, right? Don't assume that you know everything, right? So you need to learn. You need to read books. You need to study companies. You need to understand how money works. There's a way money works. Money has a way it works. You need to understand it. Yeah, of course, a lot of people believe that what is there? Is it not just money? So people don't think that they should learn about money. People feel that what is there? Is it just do it that way, do it this way? Everything works out and all that. Investing is one thing that if you don't take time to gain knowledge in, you will pay a huge price for. When you don't take time to get knowledge in investing, you will pay the huge price. And there are people I know today who are watching me that have paid the price just because they did not go through the path of learning before investing. And they paid the price. Now, I'm not even talking about paying the price because they went through, they did Ponzi scheme. No, there are people who invested even in the stock market and they lost a lot of money in the past. Why? Because they did not first learn, right? So the first things first that you must do is to first learn. You need to understand how everything works. You need to understand how money works. You need to understand how the stock market works. You need to read books to understand this, right? There are certain books, different books that will teach you some timeless principles about investing, right? You need to read books consistently. You need to gain knowledge. I say it again. If you do not gain knowledge before you go into investing, you will make mistakes. The funny thing is, most times you might not even know that you're making mistakes. But until you start getting the knowledge, you now realize that, oh, now I see. Okay, this thing that I'm doing, really, I've actually been doing it the wrong way, right? So it's important that we get the right knowledge and so we can put our money in the right investments, right? Put our money in the right investment. Yes, investing rent money, that's speculation because you're looking for double returns. Yes, so anytime that you find yourself, anytime you find yourself looking for immediate returns, right? Especially when you're not even doing a good background information well, you are likely speculating. And I think that's the topic for tomorrow on tomorrow's Thursday Live. I think that we're going to be looking at the difference between speculators and investors tomorrow on our Thursday Live tomorrow. So you should join us in that class and then get more about it, right? Get more about it. Yes, thank you so much for sharing that, sir. So you could say joining the Money Click has shown me how much I need to learn. Yes, there's a lot to learn about money. The funny thing is that people do not understand that there's a lot to learn about money. People feel that, oh, what is there to learn about money? Money is just money, money is just money. But the people who understand how money works are the ones who have been able to keep it for generations. They are the ones who are indeed really winning with money, right? And trust me, even in the Money Click program, we haven't even gone far yet. This is even just the beginning. This is just the beginning of the Money Click program, and people's eyes are already waiting, right? We're still in Exodus. We never go anywhere. So just now imagine when we get, to the half of the year and how much more knowledge, how much more awareness, how much more aware you're going to become to see that, okay, wow, I didn't know that this is how money actually works. But there's a way money works. And everyone has that opportunity to learn how money works. That's why the Money Click program registration is still ongoing, right? And if you're here listening to us, you can join us in the March cohort of the Money Click program that will be coming up. It's starting this Sunday on the 22nd. The Money Click program is starting on the 22nd, right? And you can be a part of the March cohort. And the March cohort will be our last cohort for the year. After the March cohort, we look to January 2027, right? And also, talking about the stock market, we have a course where we're going to look at the in-depth technicalities of the stock market. So what we've done here today is that we've come to look at the stock market in different areas, looked at it from the mindset point of view, we looked at it from the psychological point of view, looked at it from the things that you need at foundational level. But in this class is where we're going to look at the technicalities, right? We're going to get into the technical know-how, technical knowledge of understanding the stock market and how it works as well, right? So I'm inviting everybody who is here, especially those who are not in the Money Click program. I'm inviting you to be a part of the How to Make Money from Stocks webinar. It's one course that, trust me, that you will surely need, right? And if you're investing in the stock market, please ensure you're getting knowledge before you get into it, right? So starting in the stock market is more important than being perfect. It's not about being perfect. Learning is not about being perfect. That's not what it's about, right? You don't need to know everything, right? You just need to start small. You just need to know enough to start. The problem is that most times we don't even know enough to start. We start without knowing anything at all, right? So we need to know enough to start, right? But we need to start. We need to stay consistent. We need to think long term. We need to avoid the emotional decisions. If you're going to use emotions to make decisions about the stock market, right, you're going to make a lot of mistakes. Just like I'm seeing a lot of Nigerians with the new buzz of the new IPO ringing everywhere. A lot of people are emotional about it, and they will surely learn the hard way. Trust me, they will learn the hard way, right? So I want to leave you with these words. I want you to know today that investing is not about being lucky. No, that's not what investing is about. Investing is about being disciplined long enough for time to reward you. So people look at people who have invested in the long term, who have invested in the past, and they say, you're lucky, you're very lucky. No, it's not luck. It's not luck. Investing is not luck, right? It's not about being lucky. It's about being disciplined enough for time to reward you. So you need to be disciplined and you need to let time reward you. And that requires a high level of patience. All right. And this is where we're going to close it today for our live session here on Instagram. Yes, this is where we'll come to the end of today's class on Instagram. And to let you know, I remind you again that the How to Make Money from Stocks webinar is coming up next month. I think it's starting on the 15th or 16th of next month. Yes, starting on the 15th of next month. That's when it's starting. It's going to be a 4 days course. And currently, early bird offer is still on, and you can take advantage of the early bird offer and get on board. Right? If you're a Money Click member, of course, you know that there's a Money Click advantage for you while you access the course. And also, remember that the March cohort of the Money Click program is going live on Sunday, right? Not just the Money Click program, the March cohort of the Money Click Kids program. So maybe your child missed out on the Money Click Kids program in January. This is another opportunity. Don't let them miss out this time, right? There's something that they need, and that thing the need is right in the Money Click Kids program, right? Remember how important it is for your children to be on the path of financial literacy. A lot of us, we don't have to allow our children make the same mistakes that we made with money. And how do we avoid that? We avoid that by first learning ourselves. It doesn't start with the Money Click Kids program, no. It starts with you learning how to handle money yourself and then bringing them on board the Money Click Kids program, right? Why? The reason is because what we're giving them is the knowledge. What we're trying to build with them is the habit. But the fastest way for a child to learn about anything is through modeling. And you are their first model. And that's why you should submit yourself first to learning. That's why you should take care of yourself. That's why you should correct your own pattern. And automatically, patterns of your children would follow suit. Thank you so much, everyone, for being here. Thank you for joining us today. Remember, we're back again here tomorrow by 12 on YouTube to talk about yet another very interesting topic. Like I said, tomorrow we're going to be looking at the distinction between the speculator and an investor, and it's going to be interesting for you to be a part of it. Thank you so much, everyone, for being here. Thank you for making our time to make it to today's live session. Glad that you made it here today. All right, so thank you. If you need any information, if you want to make inquiries, the information you need, there are phone numbers on your screen, at the bottom of your screen. If you're on YouTube watching us or Facebook, at the top of your screen, if you're watching us from Instagram, you see a number scrolling through. Send a message to that number. I'll be happy to give you all the information you want. My name is Chukwemeka Onyenezi, and I am the billionaire coach, the founder of Academy. Right? Thank you so much for being here today. I'll see you again tomorrow when you join us for our YouTube live session. All right, so thank you, and thank you very much. For those of us who are in the Money Click program, we'll see right in the Money Click. For those who are inner circle yarders, right? I'll see you tomorrow in the yard. Bye-bye.